and the Bank of England is expected to hike its key interest rate by the largest amount since 1989. Analysts are expecting an increase of 0.75%, which would take interest rates up from 2.25% to 3%. The Bank of England has raised rates multiple times this year to try to put a lid on inflation. This move by the BOE would mirror aggressive rates tightening by central banks all over the world as global economies battle soaring inflation. On Wednesday, the US Federal Reserve in Washington announced a fourth consecutive hike, this time by 0.75%. While central banks are trying to rein in inflation, these rate hikes can also mean higher credit card bills and mortgage payments for millions of people. After the economic policy of the short-lived UK Prime Minister Liz Truss spooked the markets earlier this year, the new UK Prime Minister Rishi Sunak is trying to reassure international investors about the country's public finances, with his Chancellor of the Exchequer Jeremy Hunt due to give an autumn statement on the 17th of November. UK inflation is currently hovering at just over 10%. That's the highest level we've seen in this country in 40 years, off the back of soaring food prices and also energy bills. All right, let's get some more analysis on this story, and we're joined live by Jonathan Liss, who is Deputy Director of the British Influence think tank and also a journalist. Jonathan, thanks very much for joining us. We get this announcement from the Bank of England by my count in about 23 minutes. What are we expecting? 0.75%, perhaps a bit less? What are we expecting?
I mean, your guess is as good as mine, but it's the most analysts are expecting it to be 0.75%, which would, as you say, be the largest rise for many, many years, and would take interest rates to their highest level since 2008, before the financial crisis, which is obviously going to be very bad news for people who have mortgages, and is going to increase the cost of living crisis for hundreds of thousands or millions of people in Britain.
Yeah, just dig into that a bit for me. What is the impact on sort of ordinary people in the UK when the Bank of England decides to make this sort of decision? Of course, we end up talking a lot about its impact on markets, but what's the effect on just ordinary people's lives?
Well, a lot of people in Britain who have homes are on tracker mortgages, which mean that the mortgages are aligned to interest rates set by the Bank of England, because the UK government has not set interest rates since 1997, so it's set by the Independent Bank of England. And obviously, we have a serious cost of living crisis in Britain at the moment. Inflation, as you said, at 10%. That's projected to rise further in the coming few months. And that a large bulk of that has been with energy bills, but also with massive rise in food prices, for example. And so if you are telling people to pay an extra few £100s a month in mortgage repayments, that is going to become unaffordable for many, many people. And so we could be seeing a return to the crisis that we had in the early 1990s, when people had their homes repossessed because they couldn't keep up with mortgage payments.
All right, thank you very much. That was Jonathan Liss joining us with some analysis on that decision from the Bank of England, which we are expecting in terms of interest rates in the next 20 minutes or so.